Hello, everyone. So I am Shazmin, your MC for today. Thank you so much for joining us in today's dialogue on the globalization of renminbi. The forum is organized by World Scientific Publishing. Now moving on to the next slide. Now for a few housekeeping notes before we start. So you are most welcome to leave your camera on, but please keep the mics muted while the forum is ongoing. There will be a Q&A session after the talk, so please feel free to post your questions in the chat at any moment. After posting your question in the chat, you may be invited to unmute and read it out during the Q&A session if you're comfortable in doing so. Also, this webinar will be recorded and posted online. Moving on to the next slide. So today we are honored to welcome Dr. Joanna Lei as our special guest. This is Dr. Lei's second time as a special guest within the China and the World Forum. And today Dr. Lei will share with us her acute observations on the recent prevailing trends towards a rapid world adoption of the RMB, China's currency as a means of transaction. Dr. Lei began her professional career as a communication scholar at the University of Pennsylvania in the 1980s. From 1987 to 1996, she worked in the media conglomerate Capital Cities / ABC Incorporated. In New York, she was later promoted to vice president / director, then the highest ranking Asian in mainstream American media. From 1997 to 2002, Dr. Lei served as an investment partner in Baring Communication Equity Asia Singapore. Since repatriating to Taiwan in 2000, Dr. Lei has been elected senator and appointed chairman of a government-owned enterprise, KKL. In addition to serving as a chairperson of the National Women's League, she currently holds many corporate board positions in Taiwan and chairs the board of a Hong Kong-listed company. Now, we are also pleased to welcome back our familiar panel of experienced co-moderators. So the first is Professor Daxuan Fang, Honorary Dean of Henan University Belt and Road Research Institute, and the Chief Advisor of China Silk Road I-Valley Research Institute. Next slide, please. Our next co-moderator is Professor Stephen Pei, Professor of Electrical Engineering at the University of Houston. Professor Pei is also a co-organizer of the APA Justice Task Force and the Governance Committee Chair and founding board chair of United Chinese Americans. Moving on to the next slide. Then lastly, joining us as well as co-moderator is Professor Chi-Chun Chu, Professor of Political Science and International Relations at Bucknell University, USA. He is also a member of the National Committee on United States-China Relations, as well as an accomplished author and editor. Now, without further ado, let us welcome Dr. Lei to kick off the discussion.
Unmute.
Okay. Hello, can you all hear me?
Very well.
Oh, good. Let me start by saying that it is with great pleasure that I'm invited back to share my thoughts with you all. And give me a second to make sure that I can share my screen. So am I still allowed to share my screen?
Yes.
Okay, I seem to have a little problem with this. Let me make sure that it's working. It will take just a second. It's always a little annoying. Sorry about that. Oh, too bad. We tested it and now seem to have a problem. Daxuan, can I ask you to talk a little bit and let me try to figure out how I can make sure that I can share with you all?
Sure. Or we can ask the organizer, Ziming, since she has your PowerPoint, can she put it on? Mia Ziming?
Yes, I can. Just a second, I'll get it up.
Yeah, because we were able to do it just now, and all of a sudden.
Well, let me just say a few words since you put me on the spot.
Sorry about that.
I think that this is a very, we all know that U.S. and China is engaging in a less than friendly interactions at the moment. And there are many issues that is becoming a global competition. One of them is the currency, how one, especially in the United States, how it weaponized the US dollar in terms of its globalized interactions. In today's discussion, I think that we will hear from Joanne some of Chinese's attitude towards how the renminbi can be globalized and what it means to China as well as the world. Okay. Go ahead, Joanne.
Okay, I understand that I have about 30 minutes, so I'm gonna run as fast as I can. When I first talked about this topic, we basically talked about the globalization of RMB. But the more we delved into the details, the clearer it is that this is about a tale of two currencies rising in different era based on different strengths. So today, let me borrow this chart. This is a chart by UNCTAD, UN's Trade and Development Council. It succinctly put our questions at bay. It says, the current system is crafted in 1945 after World War II. Everybody knows that it's the Bretton Woods system. The international financial architecture is now undergoing a stress test of historic proportions and is failing. Of course, the stress test is something that we all have seen, starting from the US QE quantitative easing to its sudden change of its policy to quantitative tightening and to the bank failure early in March. So this is where we are, and I'm going to try to say it as succinctly, as fast as I can. The first question Daxuan asked me is, everybody talks about the globalization of RMB, and what does it really, really mean? And I thought this chart put everything in perspective. A truly international currency, such as the United States US dollar, after World War II in the Bretton Woods system, has a lot of international roles, such as is a trading currency. The currency, US dollar, has to represent significant proportion in global GDP, has to be meaningful. Then it's used by the banking system, by cross-border loans, by international debt securities, and also used as trading for capital gains and for safe haven purposes. So you have FX, foreign exchange transactions. And finally, it is used in trade and settlement. So you have trade invoices and SWIFT payments. If you look at all these percentages, you can easily find the numbers that we all cite recently. For example, from the bottom, people talked about how United States have changed the rule for SWIFT. By blocking Russia into the SWIFT system, it was effectively blocking Russia into the entire financial and trade system. So SWIFT system, payment notice system, is used by 42%. And then you can easily see in the middle, this 88 number, all international foreign exchange transactions, 88% was done by US dollars. So this is a pretty recent number by 2022 number. So when we talked about a global currency, it has to be used in trade, in transaction, in investment, and international debt securities. So these are all aspects of an international currency. So when we examine RMB, these are the aspects we have to examine as well. So when we say the tale of two stories or two currencies, let me begin by the US currency, which has three very major trends, which is now put under stress test. One is its intrinsic value. Second is how common, how popular it's used in trade. And then all the orders, all the rules and regulations in this system is part of that USD primacy. So let's start from this chart. I think even with my colleagues in financial circles, few people have thought about this chart. You know, if you talked about US dollar, Treasury issues something for the Fed to trade with all its circle of friends, 12 Fed banks, 15 G7 central banks, only G7 central banks, and then 24 primary dealers, such as HSBC, Deutsche Bank, and so on and so forth, Wells Fargo, and so on and so forth. This circle not only trade among themselves, but also has a lot to do with the international financial world that we're seeing, and it's increasingly moving from traditional banks to non-bank financial intermediaries, which is something that I will cover at the very end. And then they deal with all the other grade A banks and other central banks. The other central banks and grade A banks are in the lower part of the pyramid, and they will deal with other banks and other non-banks. So this is how it looks today for the US dollars. And I'm using publicly available data, so I'm not changing the words. So I'm sorry if you read or don't read Chinese, but I will try to be careful. On the left side is the Fed assets. On the right side is the liabilities. I'm using these two charts to illustrate this last chart. Friends is a circle of friends. Their relationship is among themselves. On the left side is the relationship between Fed and US Treasury. So it has a lot of, 1 year, 5 year, 10 year, and all kinds of T-bills or and bonds. So these lines are representing the different vehicles that the Fed holds from the United States government. One new thing is the MBS, mortgage-based securities. This is entirely new. And you can see that it's moving from almost non-existent to a very large proportion of Fed's asset. And mortgage-based securities is something that Fed started holding in the 2008 sub-debt financial crisis. So in order to salvage all the bank in terms of their liquidities and solvency, it started purchasing mortgage-based security. So this purple line is a new phenom. And then on the right-hand side, sort of basically tells you that when Fed deals with their friends, they will move in between different categories of liabilities. For example, sometimes they'll use overnight rates to buy back or push out US dollars. And the last one, this green one, is what the United States government is holding in Fed, which is the general account. It's the Treasury's general account. This is the last one. And by the way, if you were careful and observant about the debt ceiling issues, and it's all about this general account is reaching a very low level. Okay, this is Fed. And this chart basically illustrate and substantiate what I said earlier. Fed deals with the US Treasury and a circle of friends. Now, whatever Fed does has an extremely strong relationship with Wall Street. If you look at the black line, which is the Fed assets, from 1 trillion to about 4 trillion, to recently after the COVID rescue effort, it moved all the way to about 9 trillion. And after the quantitative tightening, it dropped a little bit. And then with the bank financial crisis, it moved up again. So from 1 to 4 to 9, you can see United States has printed a lot of money, sending out huge liquidity to the entire system. But at the same time, while other things are not very clear, one thing is extremely clear, that Wall Street, the blue line, has benefited from this extremely large liquidity pushing into the market. So using the broad parameter, S&P 500 index, you can see that S&P 500 basically just move up and up and up and up. Fed has a direct relationship with the Wall Street. And then it also affects other central banks. For example, ECB, that's European Central Bank, BOJ, Bank of Japan, they move, Fed is again this line, we all remember 1 to 4 trillion to about 9 trillion. And then European Central Bank moved a little bit, slightly different in terms of the curve, but it also went up very, very quickly. And in 2022, after the Ukrainian war, it actually continues to move up. So is the Bank of Japan, but not as sharp as European Central Bank. The only difference is probably with People's Bank of China, which is Renmin银行. It has a curtailed curve. It didn't move up as much as the other major central banks. With the US dollar moving about 9 times bigger than its number in 2007, because it's 1 trillion at that time, now it's about 9 trillion, you can see that recently, from 2019, a lot of central banks started offloading its treasury, US treasury, US bond, and US holding, and continue to increase its holding of gold. And this is not just for safe haven purposes. It's not just to avoid your risk, but I suspect a lot of countries are trying to prepare for a future that maybe there's a total reset of values across borders. Secondly, US, as other major trading countries, had a dominance of its currency based on its trade. For example, Portugal, Spain, Netherlands, France, Britain, all have their share of its dominance. But the United States is a little bit different. The US dominance based on its trade started from 1921, but also most notably after 1945. But after 1973, when US dollar is delinking from gold, there is a very strong period, about 40, 50 years, that the United States trade relationship, especially when foreign exchange rate is concerned, is not as strong. However, it continues to be our dominant trading and reserve currencies for by now almost 100 years. Why am I saying that trade is not strong? This number at the bottom says this is your trade balance. So when it's below 0, it will be trade deficit. And these are the trade. Blue line are the exports, red line are the imports. So you can see the export and imports. So these are the trade numbers from the United States with the world. Recently, though, we can see that the trade relationship is quite stagnant. And in fact, the trade deficit is moving from its peak to a gradual downfall. So the trade relationship is quite substantial and still robust. But is it strong enough to support USD as the trading and reserve currency? Let's take a look at some other numbers, which will be expressed when we talked about RMB. Last point is laws and long-arm jurisdiction. United States have 2 types of laws. One is trade-related rules and regulations. For example, trade restrictions, prohibitions, 301, Super 301, and so on and so forth, tariff and non-tariff barriers. The other side is something that we saw in the last 4 or 5 years, is rules concerning access to the capital market, to the Wall Street, and such as your accounting rules of a public listed company if you wanted to list in the United States, and requirements that will go beyond the border. That's why I put long-arm jurisdiction here. Then there is another set of rules which is now observed by almost every financial institution in the world, such as anti-money laundering laws, counter-terrorism financing, and so on and so forth. Then you have more political ones, like Taiwan Conflict Deterrence Act of 2023, that says US will take certain actions against PRC should there be certain conflicts, and so on and so forth. Now, just to sum up, the United States has a very strong dominance in the international market. USD is prominent and dominant for 3 reasons, but for trade, for safe haven, and also for its ease of transaction. However, recently, the intrinsic value based on the massive number of printing money and the sudden change in its policy has sent shockwave to the entire system. So we are now looking at a time of stress tests and a time of adjustment. The other currency, because we're talking about a tale of 2 currencies, the other currency is RMB. RMB pretty much grow with the growth of economic growth in PRC, with trade relations in PRC, and the geopolitical and geoeconomic changes. Let's take a look quickly at the GDP growth, and this is a very easy to understand chart. So, and also it's forecast to overtake the United States on or about 2027 to 2030. Somewhere in this neighborhood, there is a expected crossover between the total size of China's GDP and the United States. And at the same time, you can see that its percent of global GDP, which is it's the left axial here, and using the blue chart. So now it's reaching to about 18%. Look at this number. And its percentage of the developing Asia, which is the orange line, using the right axial, is about 70%. And this number is important to remember because if we look at RCEP, the rising RCEP has a lot to do with the solid foundation laid down by China. And this chart to me is very telling. If you are a geopolitical student, you will see a very strong about face of the United States vis-a-vis China on or about 2009 and 2010. 2009 is, of course, the G20, and people sort of nicknamed it as G2. Obama started asking China to lead the developing world to help the United States resolve the sub-debt crisis. But this is the very telling chart because I don't know about this time. The Obama administration, as well as Hillary Clinton, started talking about repivot or return or reset to Asia. And I think this is where their urgency came from. They saw a very clear rise in China after they got in the WTO, like from here. And then they also saw a corresponding drop in the European and the United States economic strength. So when they look at this trend and they started seeing China not as a quote unquote developing nation leader, but also as a potential challenger. I have shown Daxuan this chart, and if you're interested, you can still go to the Lowy Institute, LOWY. This is a interactive chart. So if you drive at the bottom, you can see on a year by year basis how it moved. But let's just take the beginning and the end. In 1980, China is not a very major force in international trade. The United States is an extremely strong force in international trade. But by 2018, China becomes an important player in international trade, and by now, it is the #1 trading partner of over 140 countries. So with the increase of trade relations, of course, there will be a lot of cross-border exchanges of currencies and cross-border settlement. In the past, usually done via US dollar. But gradually, you can see starting from 2009, there are a lot of local currency to currency settlement agreements. So there will be trades that will not move through the US dollar, but currency to currency direct exchange and settlement. Also, the geopolitical forces are very important. The US-China trade war, COVID, QE and QT, Ukrainian war, and active aggressive containment of China by the United States have done a whole lot in terms of moving the current stability and the sort of happy friendship groups. And as a result, or as a reaction to it, there is a rising regional and subsystem trading blocs, and they are on the rise. And recently, we will see more countries wanting to join BRICS, and then certainly Daxuan is an expert in Belt and Road Initiative. These countries will develop greater relationship with China, and it is only natural that they should move in a local currency to currency settlement or exchanges. In addition to that, there are a lot of regions and countries that have their own aspiration and growth plans, such as the Gulf countries and the Global South. So there are a lot of circles that's moving not completely outside of the United States, because the first chart I showed everybody is that the dominance of USA is almost impossible to challenge if you look at it in its totality. But piece by piece, little by little, there will be some bilateral relations and multilateral relations that's established to move a little bit away from the US dominance. And this chart sort of tells the story. RCEP is going to be more than 30% of the world economy. But in addition to RCEP, you also have the South America and African countries, Central and South and African countries moving up, and they all have their own aspirations and will continue to move into the world arena. So what do I mean by sometimes for security reasons? This is a chart that I gradually sort of worked on. Initially, I was just working on the bilateral relationship between PRC and USSR. I should just write Russia. One has CHIPS. CIPS is their exchange system that's different from the US-dominated CHIPS. And Russia used SPFS to help them navigate through the world when they were blocked from using SWIFT transactions. They each have their internal credit card system and each have their own strategies for their currencies. But this chart is only part of the story, because the two countries have gradually enhanced its relationship since the G20 2009 with the first bilateral clearance agreement, which is a settlement agreement. They have cross-border financing, settlement, foreign exchange trade, sorry, this is a wrong word, and e-banking agreements. There are a lot of things happening. But also recently, since the United States have sanctioned a lot of countries and have been sanctioning relationship or countries related to Russia, these countries, especially the Eurasian countries, have announced that they want a new monetary and financial system. This new system will give them certain security. And so it's not because they don't like United States or not like the USD, but they are not finding a security that they need for the country. So in order to build this new system, they need to address three issues: stability, liquidity, and this has to be a safe haven. People must find it comfortable to move money in and out as they wish. Then without China, it's actually very hard for this bloc to build its own system, because its relationship and its scale is relatively small. But on the left side, when you put China into the equation, China is the #1 trade partner of over 140 countries. It has very large trade relations, such as ASEAN, RCEP. And also with the Belt and Road Initiative countries, there's a natural progression of them moving together. And then at the bottom is countries with strong economic ties with China. And people may find it surprising that countries like OPEC, Saudi Arabia, are also part of this category. So when you have a very solid trade relations with a very strong security need, these two combined, there will be a very, very strong momentum building this new system going forward. So let me quickly go to a couple of issues before we open to discussion. Why does the United Nations Trade and Development Council find that the old system is failing? Because it's confronting a lot of structural issues, especially exposed during the 2023 banking crisis, the one that we're still grappling with. So let me go through this couple of charts. The first one is an eye chart. I'm not expecting to go through them in details, but I wanted to express that it is a triple whammy. So why they felt that this stress test is a historic proportion, because you're hitting with inflation, with excess liquidity, which is from 1 trillion to 9 trillion, that excess liquidity, and then bank started not being able to support it, the bank insolvency. So the three whammies, the triple whammy is hitting the USD, Bretton Woods, post-Bretton Woods, post-gold-linked system. Let me show you a couple charts in terms of what I mean. Fed has used very low interest rate to support its massive issuance of US dollars, especially during the COVID period. So from 2020 to 2022, before its sudden U-turn, it has used an extremely low interest rate to support its extremely large printing of US dollars. All of a sudden, in the beginning of 2022, it realized that it has to grapple a new problem, which is in inflation. So in 10 consecutive times, it moved its interest rate, and the top and bottom are the sort of floor and ceiling of its movable area for the open market committee. They moved in 10 consecutive times, moving it from near zero to about 5%. And pretty much we believe that by the end of the year, whether they go through QT or not, it will be somewhere around 5 or 5.15. Okay. If you are a bank, when you are issued a lot of money and your depositors come to you with a lot of money, your cost of capital is very low, about less than 1%, close near zero. So when someone with this excess deposit in your hand, if someone sell you a product, whatever product it is, at a 2 or 3% range, you are making a very happy interest spread. So if you buy a product that's 3%, you're making about 3%. So that's a very happy and almost risk-free, because everybody is selling you government-linked or MBS-linked product. But all of a sudden, when the cost of capitals moved up to 5%, the old 3% product that you were happy with is now showing a loss in terms of interest spread. So this loss is a paper loss, so you don't have to worry about, until someone who pointed to the bank and said, look, the emperor has no clothes. Let's go take our money out. So the paper loss becomes real loss, and you have to sell all these vehicles that you're holding at a loss to make sure that people, your depositors, can take their money out. And that's exactly what happened in the couple of banking problems that we saw starting from March. So this is the picture of Silicon Valley Bank. It was quite happy in 2021. And in fact, its return, was this blue line, is its return. The return it delivers to the investors are better than S&P 500, better than NASDAQ, better than banks in general. It's making a very happy return for its customers. But all of a sudden, when the interest rate environment shifted, that return disappeared. And in 2023, it went tanked. And also, at the same time, the US government is feeling its pain because your treasury has an interest-bearing component to it. And this interest component will become higher and higher. And that is why this year we're looking at a US debt ceiling north of 31 trillion. And recently they just signed an agreement to deal with it or freeze it until the end of 2024. And they will also increase by about 1 trillion. So it will go to the neighborhood of 32.5, 33 trillion. But this is not a sudden issue. It is an ongoing issue because for a long time, and I would recommend people to take a look at Peter Peterson Foundation, and they have very detailed analysis that for a long time, the government revenue, the blue line, is lower than the government spending. And most of the government spending are mandatory, so you cannot not spend it. And in fact, after your mandatory spending, you have very little to do investment in terms of, infrastructure investment, other type of investment. US government actually has very little that they can invest domestically. So with the increase in this gap between your revenue and spending, the Peterson Institute expect the US government spend more than 10% of its revenue to interest payment in the next couple of years. So it is a worsening situation. In addition to that, IMF issued a very surprising document in April this year. So I have 2-3 charts to show you. They said, okay, it is a bank issue, but it's not just a bank issue, because we now have something we call non-bank financial intermediaries, NBFIs. And the worst part of it is the non-bank financial institutes are very closely linked with the bank, a little bit like, Mayi, Jinfu, and the China banks. So when IMF look at this issue, it says, oh my God, in terms of financial leverage, asset and liability, liquidity, interconnectedness with the NBFI sector, with traditional banking institutes, and these are all new problems. All our rules and regulations that were intended for bank should apply to these non-bank financial intermediaries, but we have no clue how to do this. And why they have no clue? Because NBFIs are now increasingly interconnected with bank globally. And they would emerge with elevated leverage, poor liquidity, high level of interconnectedness, and more importantly, this is something that we had in the last page with all these vulnerabilities, but I'm showing you this page is actually outline who these non-bank financial institutes are. And these are, again, Fed's circle of friends. So you have investment funds, insurance companies, pension funds, money market funds, structured finance vehicles, hedge funds, central parties, and so on and so forth. So with all of these, you have 4 major categories of risk. And I want to show you the last one, that the IMF says, oh my God, we not only have this really big risk, we actually have no data. We have collected very little data for the details of how exposed these different NBFIs are. And if we don't even have data about how exposed they are, certainly we don't have any ability to rule and regulate them. Another issue is the cryptocurrency in the United States. And the IMF report said a little bit because they are talking about Silvergate and other banks that's targeted and serve this sector specifically. And I'm just gonna go quickly on this because we all know Bitcoin and there are other new problems coming out. But it is important to tell you that there are no lender of last resort and no buyer of last resort. When they tank, they tank. On the opposite side, this is the US scheme, and I just basically pasted it from one of the reports, so I didn't translate it into in English. But it's important to know that this central bank issued digital currency with electronic payment is very different from other cryptocurrency, even though they are both digital. The PRC central bank issued digital currency has a very strong component that is whenever they issue any digital currency, the commercial bank will deposit back into the people's bank, so to the central bank. So the total M2 money supply doesn't increase, doesn't move exponentially. The problem with non-bank financial institutions is they actually issue a lot of products. So the money supply will be growing exponentially without any ability to check, because they just keep moving on and on and on. But the China plan is to have every digital currency issued, have the traditional currency deposited back to its central bank, so the M2 doesn't change, doesn't move up, doesn't grow exponentially. And in terms of its regulatory scheme, it's exactly the same as a traditional bank. So it is an entirely different animal. When we look at the digital currency future, the two systems will have different ability to regulate the actions across the market. So very quickly on the 5 points. We are actually seeing decoupling of the two worlds, and the tale of two currencies are very clear. One is finance and investment based, and currently the most important global system. The other is trade based, the most important exchange of goods and services and infrastructures, another upcoming global system. And with the rising trade-based system, there will be changing or shifting pricing power and value distribution. So there is a possibility for rebalancing going forward. And correspondingly, there is a gradual decline of USD with the sliding US hegemony. The fourth point is RMB will be a preferred medium from circle of friends such as BRICS, Shanghai Cooperation Agreement, Gulf countries, RCEPs, to Global South, partly because this is a way for them to not have their foreign exchange risk outweigh the ability for economic growth. So finally, these trends will accelerate, and perhaps one will say exacerbate with the introduction of digital currencies. And I think the DCEP, which is China's plan of a central bank-based digital currency with electronic payment, is a safer system for us going into the digital currency future. So with that, let me just say the saga continues, and the rising force in the trade-based system and the digital currency will continue to ebb out strength and dominance of the US dollars, but in no way the RMB will be, let me go back to my first chart, will be the international currency as the United States has enjoyed, the USD has enjoyed in near future. It will be a very long and gradual and natural progression. Ladies and gentlemen, this is my tale of two currencies. Thank you for your listening.
Thank you very much for this very illuminating lecture on the tale of two currencies. I have never heard them compared with such great detail. Let me ask as just the first question. There's a lot of discussion at the moment, one hears, and I don't know how expert those comments were, regarding how Saudi Arabia, which obviously have tremendous amount of financial strength, is interested in leveraging RMB. Is that more a political statement rather than a financial statement?
Oh, okay. Actually, this is a topic that I love, because people always believe that the oil price is based on supply and demand, and I always correct them saying it is not. Because a lot of time, the US the oil price is based on very strong U.S. commodity markets. So Saudi Arabia sold oil to the United States or other players. At the same time, there will be an oil future being traded at the mercantile exchange, sometimes in Chicago, sometimes in other exchanges. So that is the financial component of the oil price, has little to do with supply and demand. So if you are Saudi Arabia, I'm selling you for a very long time at about $40 a barrel. But I know in the global market, it's selling at 60, 80 to 100. I am still collecting $40 a barrel, but all this sort of cream is taken by the commodity futures, by the traders in the financial oil, not the physical oil. So it is very easy for the OPEC country to say, aha, let me see if I can bypass this and I can deal with the buyer directly, then I can have the ability to control the oil price and actually take more of the profit to ourselves. And that is what I said, why I said the pricing power will actually change a little bit. So let me take Saudi Arabia as an example. It's going with PRC in many ways using local currency to currency. With the RMB it gets, if it gets another currency, I don't want to insult any country, but if it gets XYZ, it may have no way to use it. But if it gets RMB, it can go invest in Panjing. It is petrol industry investment. It can use to buy new arms and other equipments. It can actually get China to build infrastructure using the RMB it gets. So with this, Saudi Arabia knows that this RMB for them is an extremely useful currency for them to acquire whatever they want. So why would they still be linked to the petrodollar? Petrodollar has a lot of greed element on top of it, which is the commodity trading element. But if it's trading directly with China, getting RMB to its hands, it has the ability to exchange for whatever it needs, investment in China or infrastructure in Saudi Arabia, arms, and so on and so forth. So it's not just a political plan. It is an extremely practical plan for Saudi Arabia.
Very good. Ziqing, you have a question?
Yes.
Thank you, Professor Zhu. I'm glad to see you online.
Thank you. I'm greeting from Shanghai. Thank you, Dr. Lei, for your insightful presentation. It looks like the RMB internationalization is making some headway. And you mentioned that over China is the largest trading partner of over some 140 countries, and the strength of Chinese economy lies in trade. But as we know, in the post-COVID world, China faces enormous economic and social challenges, such as a growing wealth gap, declining and graying population, and high unemployment. So we all know also that the Chinese economy is, especially the private sector, was severely harmed by the COVID pandemic. And so I guess that the trade will be affected. And in some cases, probably trade will decline, China's trade with some countries. So given the challenges China is facing now, what do you think? How will such challenges affect the RMB's internationalization? Or ask it differently, how can internationalization of RMB help elevate some of these challenges China faces today? Thank you.
Thank you, Dr. Zhu. And I think China's think tanks, they're actually quite respectful people, because I always read their papers and I find that they have thought about quite a lot of issues from a very macro perspective. China has tried to deal with this issue for a long time, starting from its building firewalling in terms of an international trade-based market and a domestic market, 内外双循环. When they started doing that, it's building a solid foundation from the domestic market, which they have more control. But the GDP certainly has three components. One is trade, the other one is sort of capital investment, and the third is government, and then consumption, local consumption. The trade is the most vulnerable part, because if you have a very strong US dollars or you have a very weak US dollar, your exchange rate will change the nature of your trade to a large extent. So in the past, when all trades have to go through USD as an intermediary, even when they trade with, take a hot country right now is Honduras or Argentina, they have to both convert to US dollars, exchange it, and then convert back to local currency. At the same time, when you do this convert in and out, you will have a currency exposure or USD exposure for your local market. So you can see an increase in local currency to currency settlement, meaning that US, PRC and Argentina, PNC and Honduras will deal with each other on their own currency to bypass any elevation or fluctuation caused by US dollar. So that's one. So the more globalized or internationalized RMB is, that is, the more countries would accept RMB as a trading medium, the less risk it will have, or the less exposure it will have towards US dollar fluctuation. So that's simple, one. But in addition to that, you also have, when I showed you the chart, a lot of the international debt securities, meaning bank loaning you money, is based on US dollars. When you have a US dollar denominated bank facility, then you will be exposed to US interest risk. Once you move that into local currency based facilities, then you eliminate or reduce your risk to US interest rate environment. And the US interest rate environment, like I showed you earlier, even banks such as Credit Suisse couldn't sustain under sudden U-turn of the Fed. So that's two, bank facilities, international borrowings. Thirdly, if you were to gradually use your currency in the trading, in the capital market, which is something that US is strong and China is extremely weak, if you need to do a internationalization of trading, then you also need to have a OBU, meaning that it's not onshore, it's offshore banking unit to help you do that. So gradually introducing offshore RMB will also increase the participation of China's financial sector into the international financial sector. That will give them further sophistication and ability to produce or to design innovative products and gradually upgrade the entire level of expertise for the financial sector. So that will further support future developments. So in terms of trade, in terms of debt facilities, and in terms of sophistication of financial market or international innovation, internationalization of RMB will be a very strong incentive for other countries to deal with China and for China to also move away from some of the current risks. And I hope that answers at least part of your question. Thanks.
Thank you, Dr. Lei.
Dr. Pei?
Yeah. Well, I think as an engineer, I'm really not qualified to ask some very sophisticated question, but I think my role is really to ask some question which the novice like me try to figure out. I think you answered most of the question already. I really appreciate, because I read a lot, but the more I read, the more confusing I am.
So am I.
Yeah, I think your talk today, I think, make it very clear. Seems to be China's first priority is really to use the renminbi as a vehicle of trade. So I think that's a very important issue. No question about that. But I think over recent years, we heard different things. One of them is, of course, you cover, is the cryptocurrency, the digitalize of RMB. What role does it play? And people hyped the whole thing a lot in the past, before we had this collapse, that the digitalized renminbi will play a major role in the internationalize of renminbi. On the other hand, we look at the other indicators. For example, people talk a lot about the weights in the SDR basket. So I think RMB pay a very high percentage there in comparison to the holding of all the federal banks in other countries. One is double digit, one is what, 3%, something like that.
Yep.
So I think all these financial indicators, they show such disparity between them. And what is more important, I think you make it clear today, if I understand you correctly, trade is maybe the number one priority for the Chinese government. But how about the other factors?
Okay. I think trade is the number one and the safest approach going forward for China. If China wants to be an international currency and moving too fast, it will expose to a lot of undesirable challenges, such as you must have a large enough reserve so that people can take money in and out whenever they want. And that is actually the USD problem. When the United States delink from gold, it is because they couldn't expand its pool to support the then trading relations. The trading relations keep increasing, and the link with gold restricted USD from enlarging its pool. So now, if it's still linked to gold, it cannot move from 1 trillion to 9 trillion from 2009 to 2022. Now, let's examine 2 or 3 issues that you talked about. I think IMF, World Bank, and the structure, the architecture that we started with is a legacy system. They were designed in 1945. They were designed also to support the hegemony of those countries at the helm. So it is not surprising that SDR gradually accepted RMB, but in a very, very snail pace. In the legacy system will continue to be dominated by the strong economies, OECD countries, and they will protect the strength and dominance of the OECD countries and G7 countries for as long as they can. So it is not surprising. So let's then move into the future system. I actually, at the end of the presentation, showed 2 very quick charts, which were the crypto system as well, and the other one, let me see if I could pull it out. The crypto, one is the crypto system, the other is the, sorry, let me just pull it from the back. The other is the digital currency. The crypto system actually had no lender or buyer of the last result. When it failed, there's no one holding it at the end of the day, unlike traditional bank and traditional currency. So that's the crypto system. The other one proposed by China, that's central bank issued digital currency, and it's coupled with electronic payment, will actually help RMB to bypass a lot of the current barriers and go directly into the new world. Just think about 支付宝 or your 微信支付, the one that you are paying money using WeChat. And, there is no SWIFT in this process. There is no chips in the process. There is no Fed wire in this process. All 3 were the clearance and settlement infrastructure by the old US dollar system, chips, Fed wires, And then we also use SWIFT as the exchange of communication systems. Now, when you are using your mobile phone and you use those electronic payments, you didn't go through any of the traditional systems. Of course, they are not the central bank digital currency yet, but with the experiences of the current electronic payment system, and by the way, the electronic payment system is already cross-border. So with the current electronic system, you will have an entirely different infrastructure, entirely different regulatory structure, entirely different clearance and settlement structure. And that will allow new players, such as the digital RMB, to go into the world without restrictions or handcuffs by the old players, the old guards. Now, of course, you want to be very, very careful, because now we're seeing a lot of cryptocurrency being used by criminals in cross-border crimes. That is why the duality in PRC system is very important. It's using the same regulatory scheme to guard both the commercial banks as well as the third-party payment systems virtual accounts. So this is the virtual accounts. The same banking regulator will regulate both. And the reason why they can regulate these is because whenever they issue digital currency, they always have the traditional currency coming back. They have a very clear size control of the monetary supply. And that is not happening in other countries, and it's not happening in other cryptocurrencies. So I think the more we move into the future system, the ease of transaction, the liquidity, and the regulatory strength of the PRC proposals will be accepted by more countries. And even the United States is now thinking about a central bank issued digital currency and not just let the cryptocurrencies run in the Wild Wild West. Thank you.
Thank you.
Let me ask one more question before we open to someone else. All the discussions you made today, or not all, but good percentage of it, really deals with the first world, the Europeans, the Americans, and now China is sort of in this first world too. But there is the global South. And the global South, in particular, Africa. I think we may have participants today that's from Africa, and also South America. I think that how they will become important, they perhaps will also become very important for the globalization of renminbi. In fact, it might be easier for them to think of renminbi than US dollars, because they generally don't have much US dollars at the moment and being exploited very much. So what do you think about South America, and especially Africa, which has a gigantic population?
Dasha, I think your question actually addressed the crux of what currency is. You know, currency is what you can use to exchange what you need, right? So when you look at the global South countries, they generally need infrastructure, they need building of a basic industry, they need to expand their customer and consumer market, and they also need to increase their exports so that they can earn more foreign exchange. And for all these four issues, RMB is a pretty good selection, because when you sell to China, hold RMB, you are able to use the RMB you hold in your hands to exchange what you need for your own growth and development. And that is why I have put the fourth point, that is, I think, the preferred medium status of RMB will be shared not only by its current circle of friends, but also by the global South, the other countries who have aspiration. Say if you only have coconut and shrimp that you want to sell, when you sell your coconut and shrimp to the United States, and versus when you sell your coconut and shrimp to China. What you can get in exchange may be quite different. If you go to the United States, in exchange, you will actually have a set of pricing and a set of categories of products, which may or may not be suitable for the development stage of your economy. So when you go to China, China has an entire gamut of all kinds of products. You know, it has 40 over categories, and they have 666 small categories. They have the entire gamut of all kinds of products. In addition to that, they have an entire spread of different price. You know, I want to show you this. This is something that I love to show. I love my grazer, cheese grazer. If you buy this in the United States, Bed Bath & Beyond and so on and so forth, this one will cost you about 20 to 25 US dollars. And if you buy it in Taobao, the same one, you probably pay about 20 RMB. So this is the kind of differences of price, product category that I'm talking about. And with the last 20 years, when China was the world factory, it has absorbed all the best order, the best design, and the most stringent quality control by the international players. So whatever they produce is now of the same quality, but with quote unquote a China price. So if you are the global South, if you have sold your 1 ton of shrimp, you know, where would you rather go to buy all kinds of stuff that you want to bring home? Probably China will give you a better deal.
Very good. I have a question coming from a PhD student from the National University of Malaysia, Mr. Jun Lee. Jun Lee, could you turn on your face and then ask the question? Go ahead, ask the question.
Okay, so my question is the digital currency RMB is one of the instrument of the Chinese financial statecraft, or it need more time to develop? So this is my question.
Okay. The digital currency, central bank issued digital currency is actually quite well developed. If you go through their Renmin House, there is a currency institute. If you go on that, they have a very, very succinct and extremely comprehensive plan on how using the digital currency can reduce the cost of issuing the paper notes, but at the same time, giving the central bank the same level of control in the PRC economy vis-a-vis the world. So it's very easy to find the comprehensive plan. I think it's extremely well developed, and they started experimenting it in the Winter Olympic, if you recall. And now they are also doing ground tests in different markets. In addition to that, in addition to the digital currency, I think the strength of China is actually the electronic payment. The EP, electronic payment system, is extremely comprehensive and very well developed. So the two combined will give you ease of execution and will give you a very rapid deployment. Thank you.
Thank you so much.
Okay. We need to get Daxuan back, right?
Well, while we're waiting for him.
Okay, Professor Zhu, sorry, I muted
Okay.
myself.
I was going to chime in, but you're back. That's great. So, if I may, can I ask maybe 2 small questions? First, we're talking about 2 currencies, but we're really talking about the competition between 2 great powers, the United States and China, right? And
Yeah.
we all know that in the past decade or so, the United States has strongly opposed some major initiatives from China, including the Belt and Road Initiative and the Asia Infrastructure Investment Bank. So, given the sorry state of US-China relations today, I assume that the US government is not very happy with the internationalization of the RMB, So is there anything the United States can do to block or slow down the RMB internationalization? The first small question. Second small question, we all know Hong Kong is a global financial center and a major RMB transaction hub. So what kind of role can Hong Kong play to facilitate the RMB's internationalization? Thank you very much.
Let me do Hong Kong first. Hong Kong is poised to be a great OBU center. If you recall, close to 10 years ago, Great Britain, actually, London wanted to be the pioneer ushering RMB into the international world. So it actually issued RMB-based debt and sell it to the international financial institutions. But with the recent relationship between Great Britain and China, I think they have already lost that position. However, Hong Kong can still be a very important gateway and a very strong OBU center. It can develop and sell different kinds of product, RMB denominated and offshore RMB denominated, and so on and so forth. So I'm always gung-ho about Hong Kong. People keep saying that Hong Kong is, going to be replaced by Shanghai and so on and so forth. I think Hong Kong has a very sophisticated financial infrastructure with a lot of talents in terms of legal, financial, accounting, and just general administration strength. However, Hong Kong needs to find its soul as soon as it can, because there is an exodus of talent. And if it continues to lose those talents, then the ones who are left behind will have to build from scratch. They will build it, but the ones who left will no longer share the strength of the new Hong Kong. In terms of United States, I think the US has now demonstrated to the world that they can do anything. They can actually take the assets or deposit of one country and decided to give it to another country. They can decide to confiscate whatever is legally the property of another sovereignty, another country. They have the ability to confiscate it and then shift it around. So I don't think the United States will surprise me if they decided at one point that they need to take a nuclear level attack to China if they find it a threat. But certainly the more it does something like this, unilaterally exercising its bandwidth and its strength, the more people will try to run away, to exit. The exodus will continue, because then the United States and USD is no longer a safe haven currency. United States is no longer a benevolent hegemon. So if the United States does more unilateral changes in terms of the rules or decided to confiscate other countries' properties, it will definitely backlash into its own ability to communicate to the rest of the world. And I think it really hurts the United States more than it would help it.
Daxuan,
Yes.
Dr. Zhu asked the first half the question I want to ask. May I complete my second half?
Of course. Go ahead.
Dr. Lei, I think you started the talk today, the story of two currency, but at the end, really, you summarized the whole thing as a story of two financial systems.
Mm-hmm.
I think right now we are seeing that the Western world is moving in the direction of trying to decouple. So the question is the world going to end up with two financial systems? I think it will coexist for a while. The question is, the other part I've been reading a lot is about the Bretton Woods system and the background behind that, because that was really the transition from the British to American. I think basically the World War II and right up with the Bretton Woods system, that basically complete the transition. So the question is, do you see what we have now is going to just financial system decouple is part of the whole decouple. If that's the case, it's very devastating to the whole world. Do you see sometime in the future, one system will dominate and we are back to the Bretton Woods system like universal?
Yeah. Well, let me first go back to the Bretton Woods. The Bretton Woods at the time has linked US dollar to gold. And the moment when it delinked in the 1970, early 1971, gradually through 73, the moment when it delinked, US dollar is now a faith currency. People have faith in the United States. It no longer linked with something physical. Now, if you go back to the history, I think post-war, people agreed on two systems. Both are contingent upon the goodwill of the strong and the big and the powerful. One is the UN, the world sort of political system. The other one is the Bretton Woods, the world financial architecture. With that, they built World Bank, they built IMF, they built European Revival Bank. So they also facilitated the Marshall Plan so that the United States participated in the growth of Europe or the rebuild of the Europe. So all of this has a very strong historical reason why they were designed at the time. And also there was a very strong historical need why it has to happen that way. But now we are looking at the downfall of the US dollar. I cannot overemphasize the fact that with the increase of Fed balance sheet from 1 trillion to 9 trillion, they increased by 8 trillion. With the non-bank financial intermediaries, it continues to multiply to the order of 10 times. So offshore, you have about 80 trillion US dollars moving around. And they were not based on some very solid oil, commodity, or gold. It's based on a faith of the US system. So to the extent that people continue to have faith in the US system and believe that it's a benevolent hegemon, then the system will continue to thrive. But once people started feeling like some of the sanctioned countries begin to feel that this is not a fair system, whatever we produce is not giving us the fair value back, and also the country holding the helm, all the rules and regulations can just act unilaterally like they did to Afghanistan, to Russia, then the faith element will crumble. So it is maybe a little too early to say it, but I think we are seeing the gradual downfall of a very strong long-term hegemon in terms of military and financial. Now, it's a gradual downfall. It's not going to happen overnight, but the more people started to protect themselves, they will pull themselves partially away from the dominance of the US. And that is happening in the global South, as Dashen earlier asked me.
Very good.
Yeah.
I have a question coming from Mr. Zheng Chenggang, who was from Dallas. I don't know who he is. Anyway, the question is actually very personal. He said, given the prospect of the renminbi, is there any suggestion you as a financial advisor on personal asset allocation?
Actually, I don't give personal advice, but usually I tell people that, just take a look at where you're gonna spend your money. Say if you have the need to send your kids to Australia, then you need Australian dollars. If you're buying a house in Shanghai, you need RMB. I believe that you can arbitrage yourself and minimize your exposure to currency risk by thinking what you need to spend in 5-10 years, and then allocate your portfolio that way. To me, that is a very conservative and pretty much fail-safe approach.
Okay. Last one, I think is one of the last one, is Mr. Hong Yi, who wants to ask a question. Are you there, Mr. Hong Yi?
Yes, I am.
Okay, go ahead. But yeah, anyway.
All right, let me try to
go
open
ahead,
it.
please.
All right. Okay. Yes. Okay. Well, thanks very much for the program and speakers. Pleasing the world, military and dollar dominance actually I think can be very hard on the US alone. They want to hold the position and they want to, it's being run on by its ways. So suppose that some leaders in the US also want to embrace the idea that the leadership is being shared and also accountability and the burdens. So maybe they will embrace the idea of having more countries, more currency to be joined with the US as a reserve and also as a settlement and tools. What are their policy preferences and where are they how would you find them and maybe they can interested and to really make that enable this to happen.
Well, thank you, Hong Yi. I'm also an optimist. I believe that people always have the ability to work together and we don't have to always kill each other. So what you're asking is, can someone find a different approach, not a zero-sum approach, but a win-win approach, right? In fact, China did. China in the Belt and Road Initiative have decided to help other countries to grow their economy so that when China make money from those countries, it is not a zero-sum approach. It is a win-win approach. However, at the same time, I don't see the United States taking the same view on China. I think they did take China as a very major challenger and risk. And they're still using the zero-sum approach to look at the relationship between US and China. So unfortunately, we have to continue to be hopeful and continue to be optimistic and find the.
Hello? What happened? Oh, we lost her?
We lost her.
Okay. Well, anyway, Dr. Pei, do you want to summarize something?
Well, not really, I think, but let me expand on my question. Because if you look at what happened to the gold base, we were gold base way before. I think it started in the way back. It fall apart when we have the First World War, and the gold base went away. It came back afterwards. It fall apart again in the World War II. So basically, there is a transition in the Bretton Woods system. I think it's more than just Bretton Woods system and the United Nations. Both systems were really initiated by the United States at that time. At that time, we were 50% of the global GDP. We were so rich, we are very generous to people worldwide. So I think at that time, we really hold the moral high ground. But if you look at behind the scene, for example, I think most recently, in the past couple of years, Biden signed 2 agreements with British. But that was really initiated from way back when Roosevelt and Churchill signed this Atlantic Charter. Atlantic Charter is the other move that really got British to some degree decoupled from other colonies. So this overall transition of the power from the British Empire to the United States. So I'm just wondering how the transition either from one system to 2 financial systems or whatever happened, what could happen to our world if the decouple and the polarized system continue to dominate the future trend. Right now, we are just seeing everything we're doing is more and more decoupled. That makes the world more and more dangerous than it was before. And I don't see the reverse of the trend. That makes me very scared. I don't know whether anybody will share his thought. I think today, Dr. Lei's talk really confirmed my concern even more. She's optimistic. I'm not that optimistic.
Zijun?
I don't have any further comments, but I just want to thank Dr. Lei, who is not here with us now.
We lost her.
Very insightful presentation. I think I learned a lot from it. And also want to thank everybody here for joining us to support our China in the World Forum. So I'll give the time back to Dr. Feng. Thank you.
Well, I don't know whether we can get her back. I think to go through what she said today or this evening, I think that she presented all the challenges that the two major powers have at the moment from the financial point of view. Decoupling of the United States and China, or rather decoupling of the East and the West, could be detrimental. Oh, Joanne, did you hear what Bai Xiansheng say?
I missed that part. Somehow I was kicked out.
You want to, Bai Xiansheng, do you want to just briefly say what you asked?
Yeah, the question I asked is, you talk about after World War II, there were two systems. One on the financial world, the other one ruled the rest of the world. I think that both systems at that time was really driven by the United States. And that two systems based is the transition from the British Empire to the United States dominant world order. At that time, we were so rich. So we're very generous to the world.
Yeah.
But I think you look at that, even at that time, Roosevelt and Churchill signed the Atlantic Charter. That really also set the stage to free the colonies away from the British Empire. So there seemed to be an overall strategy there, and the transition happened. And to send the two war actually helped the transition, made the transition pretty fast. But right now, I look at the current situation, really is more and more decoupling between the system in the foreseeable future. And that makes me very worried. I'm not as optimistic as you are.
Well, I think being an optimist is a determination. I just determined to look at things optimistically, even though when there are gray clouds everywhere. You're right. It's easy to be generous when you are the large leading economy in the world. US has never had a peer competitor economically. The number two economies, like you said, including USSR, including Great Britain, including 1980s Japan, all these other countries has a very large difference with China. China's scale is really large. China is now close to 80% of US GDP. It will probably overtake US in terms of GDP by 2027 to 2030, depends on your scenarios. But also in terms of purchase price and purchase parity, it's already at the same level as the United States. So it is very easy to look at the new kid on the block as a big threat. And United States is definitely seeing China as a very major threat. And it's even more tangible, real than a military threat, because China doesn't pose a real military threat to the United States. China doesn't threaten the United States in any meaningful way, but economically, it is growing bigger. It's taking part of the economic pie globally from the entire world. So if you look at the distribution that was almost totally enjoyed by OECD countries in the past, to now global South and other countries are gradually asking for their fair share, it is not surprising that the old lords, the old guards, find it very threatening. Oh, and
Yes.
by the way, in business, if you can crush your competitor, you crush it. If you are twice its size, 3 times, 4 times its size, you crush it, because you don't want to grow a competitor going forward. However, in a world with risk, like in the internet arena, and currently probably in the new developments, you will have a new win-win philosophy because you're sharing risk. Now the world is going into a very uncertain era. There are uncharted waters going forward. So I hope that when the world decided to share risk, it will somehow or partially go back to the win-win philosophy.
Let me ask the very last question before we close today. As China grows, which it obviously is going to grow, independent of whether the United States stop it or not, is there any danger or any sign that China would just become a new hegemon?
I think a hegemon can be a value neutral word. It depends on its action towards others. You can be a malevolent hegemon. You can also be a benevolent hegemon. So it is now the time for us to take a closer look at the proposed plan that China has versus the deed it actually exercised towards the other countries. So a hegemon is not necessarily bad, depends on whether it's sharing its wealth and its capabilities or it's exploiting the other competitors.
Okay, well, I think we have exhausted the questions we wanted to ask today. I'm sure there's some people would like to ask more, but I think time-wise, we have reached the end. It has been a truly fascinating and exciting discussion of renminbi and the challenges that Joanne has presented to all the audience today. China has in terms of how renminbi can become an important currency. And at the same time, globalization of the renminbi probably is not divorced from the globalization of China becoming a global political power. Thank you very much, Joanne. Again, what can I say? Thank you, thank you, thank you.
And thank you for having me. Thank you for having me. Bye.
Bye-bye, everyone.
Bye-bye.
Bye. Great talk. Thank you.
Doctor, I have a question for you.
Okay,
Wow.
we'll let you two talk. Goodbye.